Welcome to today's finance series. It is a pleasure connecting with you. I hope last week went well. It is a new week, and I'm going to be talking about common financial planning mistakes to avoid in business. Effective financial planning is crucial for businesses to achieve their goals, to manage risk, and to ensure long-term sustainability. However, many businesses make common mistakes when it comes to financial planning, and this has huge consequences on the business. Let us look at some of these common mistakes that a lot of businesses make, and let's see how best to avoid them as we carry out our day-to-day activities within business. The first mistake is lack of a comprehensive financial plan. So the failure to define your financial goals and your objectives, not having a clear understanding of what you even want to achieve financially is a problem for a business. A lot of entrepreneurs and SME business holders have this financial plan in their minds. They have it in their heads. You need to ensure that you have it documented. When it is documented in your business plan, it makes it more easy for you to run with. It makes it more easy for you to communicate with your team and drive it to achieve your goals. Another issue business have is around cash flow management. So when there is insufficient cash flows to meet unexpected expenses or to even cover their day-to-day expenses, there's always an issue with financial planning. The third mistake is inadequate risk management. So failure to identify and assess financial risk, not recognizing a potential financial risk such as market fluctuation, regulatory changes, or even unexpected expenses can impact a business. The fourth mistake is around inefficient use of capital. So when a business or business owners make poor investment decisions, or they invest in projects that do not align with their business goals, or projects that have a very low return on investment, then it impacts their ability to generate more money to turn things around within the business. Let's look at the failure to monitor and adjust as things change within the business cycle. Not regularly reviewing your financial performance as a business, or failure to even regularly review this financial performance, your KPIs and your performance metrics to identify areas that you need to improve on, would impact your performance as you go ahead. Over-reliance on a single customer segment or a single market too can impact a business. So for example, if 60% of your revenue is coming from a particular customer segment, that shows a high customer concentration. If anything happens to that business, or if anything happens to the relationship you have with that customer, it means automatically your sales will drop to the tune of that 60%. So you need to ensure that this is properly worked on in your organization. Another mistake or another issues businesses have or SMEs have is around poor accounting and financial reporting. So when there is no accounting system, or even the accounting system in place is not strong enough, is not adequate, is not able to accurately track financial transactions, then it becomes an issue because you cannot rely on financial information. Decisions that are made based on that financial information might not even be, sustainable or reliable in the near future because the data might not even be correct. So it poses a problem for businesses on the long run. Lack of succession plan is another issue a lot of businesses have, particularly SMEs. So not having a plan in place for transition of ownership or management is a key risk for every business. Failure to seek professional advice where necessary is also an issue a lot of professionals have in businesses. So you need to identify what is your pain point. Where do you need help? Is it in relation to financial transactions, or even how to carry out this transaction itself or increase your sales? Whatever the problem is and you need advice or you need help, it's better to seek it early to prevent the risk of business failures or maybe shutting down in the near future. Do you need help? You need to evaluate your business and identify what mistake you are making as a business owner. As an employee, what is the mistake that your business is also, making? Identifying this early would help to prevent the risk of shutting down in the near future. It will help to mitigate any risk that would impact your going concern as a business. I hope this information has been very helpful, and I hope you've been able to identify the level in which your business is and recognize the steps that you need to take to move to the next level. Thank you once again for your time, and we'll have a